Okay. Good evening, guys. Hello, folks. How are you doing? It's been a while. I hope you guys are doing well. So today is Tuesday, the 26th of May, 2026. I'm going to be reviewing today's trade. The asset that I'm going to be reviewing is the Nasdaq 100. That's the only asset that I trade, and I'll be sharing more insights on how I trade. So without any delay, let's get into the video. So looking at my screen here, you're going to see that on the Nasdaq 100, which is us100 cash CFD, because I'm trading the CFD, not the futures. So this is the indices. This is the weekly time frame, and we have the weekly candles. So looking to the left, we have the previous weekly candle, which have a high and a low. The low have been annotated, but the high is not annotated because we have already traded above the high with this current wick candle that is printing. So let's drop down to the daily time frame and start dissecting this weekly candle. So before the week open, I'm already bullish because of the of course the things that are going in the world. Iran and US just signed peace deal, and SpaceX just launched their IPO on that Nasdaq 100. So it's a good thing. I'm expecting the Nasdaq to rally because of these fundamental events. So, but before we go any further, I want us to look at the economic calendar, because that's like my my trading filter. If the economic calendar tells me when to trade and when not to trade, you know, like, because I really know how to, because I'm trading the weekly candle power of three. I'm aiming to target the expansion, so I only want to position myself in the days that the expansion is going to occur. I don't want to be in the accumulation phase. Ideally, I want to be in the manipulation leg and try and catch the low or the high of the candle and then ride it to the high or low, anyhow you're gonna put it. If it is a bullish candle, I like to buy below the opening price of the week candle and then ride it to the high, maybe Thursday or Friday, and then get out. So that's simply the model that I trade. So let's look at the economic calendar. So this is the economic calendar. I'm going to switch it to like the whole week view. So I just selected this week and apply settings. My economic calendar is basically just showing me the USD, because what I trade is directly related with tied to USD. I only trade the Nasdaq 100, so USD is the only pair that I'm looking for when it comes to news. So ideally, I set my time zone to be in New York, as you can see here. GMT -4 Eastern time, and time format 24 hours. So that's the time that I'm using, because the time aligns with my chart. As you can see, 1547 Forex Factory. Let me refresh the page so that we can have the current time. Okay, as you can see, 1547. The time is correct now. So the time in New York now is 1547. So market is almost closing. And then when you look at this filter, I'm sorry, not there. This filter, I've already unchecked all the other currencies and I'm leaving only USD, because that's the only currency that matters to me. You understand? The only news that affect USD, that's what I want to see. But if you are trading forex or any other currency, you have to select on the currency that you are dealing with. That's a topic for another day. So as you can see, on Monday we have bank holiday. So I didn't trade on Monday. Ideally, usually, based on the power of three rule, we don't trade on Monday. So Monday is a holiday for us. We are just using it to collect more information so that we can engage on Tuesday and Wednesday and Thursday and Friday. So on Tuesday we have news around 10. It's a medium impact news. So you are going to see how that plays out in the chat today. And tomorrow we don't have any high impact news tomorrow. So we'll see how the day is going to be. Ideally, we are just looking for continuation of the weekly candle direction to continue the expansion since it is Wednesday. So on Thursday we have high impact news. We have the core PCE price index. So that's the most important news. So we are not going to be looking for any setup before 8:30. We are going to be trading after the news have been released. That's for Thursday. And then on Friday, we don't have any high impact news, so we are going to see if the high is going to form on Friday and how the weekly candle is going to close. But bear in mind, this is the economic calendar. We only have high impact news on Thursday. So maybe we can get weekly reversal or something counter to what we are seeing now on Thursday. So let's go back to the chart. So let's drop down to the daily time frame. My TradingView, I basically use TradingView on the web. I don't need to install the app. So this is it. So all these vertical lines you are seeing delineate weekly candle through the daily time frame. So from Monday to Sunday, from Sunday to Sunday, that's 1 week. Sunday to Sunday 1 week. Sunday to Sunday 1 week. So as you can see, we have Monday's candle here. This is Monday, and then this is Tuesday candle, which is currently still printing. So on Monday we didn't trade, so we have a full bullish candle, a full bullish candle, full body. This indicates that the market, the algorithm is pricing is going to pull price higher, because here there is full order here. Everything is already booked. If the market should trade below this Monday's candle, then we are bullish. And as you can see, we didn't even have the chance to make the weekly candle weak. So I think the market is really bullish, given what Tuesday did. We trade down into this Monday's candle to pair all the orders, to trick everyone that the market is going short. Everyone is chasing this market, selling it. But we, the smart money, we wait. Once they are selling it, then we buy it at a low price. They are selling it at everyone is selling it at a cheap price, and we are buying it at a cheap price because it's below the daily open. Because that's what we trade, power of three. We always wait for the candle to open. If we are bullish, we want to see it trade lower, and then we'll buy in the week, and then we hold it and expect the candle to expand higher. So that's basically what I trade, power of three. It's a very simple model. So seeing the daily, we have already marked out our sell side liquidity and buy side liquidity, and we're already trading above the high. This is a market that is trading at all-time high, so we always expect to see bullish market, until we have a clear market structure break. Not market structure shift, market structure break is a long time break in market, which will cause a reversal. But market structure shift is just a run on liquidity. You understand that the market is shifting from bearish to bullish when the market is bullish, or when the market is bearish, you say the market is shifting from bullish to bearish, because that's the intended movement that is supposed to be on the candle. So let's drop down to the 1 hour time frame. After looking at the daily time frame, the weekly time frame, what I usually do, all my trading stuff happens in on this time frame. I really love the 1 hour time frame because it gives me all the information that I need, and sometimes I even execute my trade based on the 1 hour time frame. But sometimes if there is a clear, okay, if the risk is too large, I will drop down to the 15-minute time frame or 5-minute time frame. I don't go below the 5-minute time frame since I'm trading the power of three model. I have enough range to target. So even though my entry is not that good, or my stop loss is wide, I don't care because my target is very very high. So that's how it is. So looking at the 1 hour time frame, I woke up around 4 a.m. London, New York time. Around 4 a.m. I woke up and I saw this candle printing this way. And automatically, I just take my line here, my horizontal ray, place it below this low, and then this is my sell stop. Why did I mark this low? Because this is the Asian range from 8 p.m. to 12 a.m. That's the Asian range. So we always, if we are bullish, we always want to see the market trade below the Asian range low. That is, stack the sell stops and then trade higher. If you are bearish, you always want to see the market trade above the Asian range high and then drop and close lower. That's how I gauge my setups. So to me, this is an A plus setup because we have already taken a low. This is the sell stops. This stops here I've already taken out. So automatically as we have taken out the sell stops, we are going to be targeting the Asian range high. That is the first target. Oops, sorry, this thing is crazy. Let me just stop using it. And if you look to the left, this is a fair value gap. Still is handy. So this is a fair value gap that you will see. The market drop into the fair value gap and it's above the weekly open. It doesn't have to trade below the weekly opening price because, like I told you, the market is already bullish. So it doesn't have. It just needs little liquidity to just push up. So any run below a short time low is enough. You can just push the market up. Okay. So once I saw this stop run, I immediately mark this fair value gap. This is my low risk buy entry, and then yeah, indeed I entered around this. I entered around here, around this candle right here, and then I got out around this candle right here. That's when I got out because I've already hit my daily target. Tomorrow is another good day for trading. So if you didn't get your entry in this low risk buy here, which is close to the opening price, as you can see, this, oh, sorry about that, so this fair value gap that you're seeing here is in close proximity with the opening price, which is delineated here with 000. That's the opening price of the daily candle. So I'd like to get in below the opening price or close to the opening price. But since there is no any fair value gap below the opening price, this is the first presented fair value gap after the stop run after the stop run have occurred. This is the first presented fair value gap. So this is my entry at the 50%, 29.775.95. That's the entry right here. The stop loss is right here on this candle. That's the stop loss, and then the take profit is right here. As you can see, it's a good, nice risk to reward ratio. So let's drop down to the lower time frame to see how this works. So on the lower time frame, as you can see, there is no any fair value gap here that is tangible. So that's why I take my entry from the 1H time frame. So whenever I get an entry that is good on the 1H time frame, I don't even drop down to the 15 or 5-minute time frame. So that's how I trade. If I don't see setup like this, there is no entry. If I don't see this type of setup right here, there is no entry for me. So that's my model. And if you really want to understand, let's see Monday. As you can see, Monday open up around this level here. That's Monday's opening price. So if we are bullish, we want to see the market trade down and then trade up, but that doesn't happen here. And if we are bearish, we want to see the market trade up and then trade down. It didn't happen here. We just have shallow movement, and it is Monday. So we don't trade on Monday because normally Monday is usually the accumulation phase of the weekly candle. Monday, Tuesday should form the low of the week, and then we have Wednesday expansion, Thursday expansion. So if you didn't take this low risk buy here, there is another opportunity. That's why it's good to always wait. The market is not going to run off and leave you. The market always move up and down. If it is bullish, it will move up, then retrace a little bit to give more people opportunity. Those that didn't have opportunity to enter earlier to still enter. So as you can see, this is another opportunity too, still on the 1H time frame. That's why I tell you the 1H time frame is the best time frame to trade the daily power of trade. So as you can see, the fair value gap was from around 9 o'clock, and then we have this retracement, which this candle right here, if you are looking at the market when it's happening live, is going to be scary to you. So you're going to flip your bias and think that the market is going bearish, but no. Look at it. This is 10 and this is 11 a.m. candles. So the market dropped down, and then it fails to trade below this low, because whenever you have a fair value gap entry, your stop loss should be below the candle 1. So your stop loss will be here. If your entry is here or here, your stop loss is going to be here. So you see your stop loss has not been triggered. This is just a fake move to shake out people that are already long, or people that chase price going higher. So it's doing two things here: to offset buyers, and then to catch sellers off guard. So after that, the market just reversed and started trading higher. If I was this is outside my session, outside my trading plan, that's why I didn't take this entry. So it is what it is. Tomorrow is another day. We're going to continue trading the weekly candle until on Thursday. Then we will now see what the market is going to do. Is it going to continue expanding higher, or we'll have a classic Thursday reversal? I don't know. So anyways, I'm going to talk to you tomorrow. This is just a short market review on the trade that I took today. So I hope you find this video insightful. I will keep on posting this kind of videos time to time so that you can be able to understand how to trade this market efficiently and professionally. You don't have to chase price, just one entry. So as you can see in this in today's candle, I only have two entries with my model. This is my first entry and this is my take profits, TP1. If I'm willing to hold, I'm going to take partials here, move my stop loss to break even, and then let the trade continue to run. But if I'm going to close my full position, then I'm going to close it here. That's if I enter here. And if I enter here, I'm going to target at least 1 to 2. I can even just, when the market gets here, just take my profit here and then move. But you can still hold, but you can target 1 to 2, 1 to 3. And if you want to hold for the weekly expansion, you can just let it run till tomorrow, and then Thursday early morning you can close the trade. So anyhow it is, let's see how it goes. I hope you find this insightful, and be safe. Thank you for watching.